another red day. It was another profitable day if you were taking puts to the downside. I gave these beautiful trade setups, 3 of them, and one of them didn't signal. It was on AMD, and the price action just simply moved sideways throughout the day. We saw Tesla fall apart. We saw NVDA end on its lows. I'm going to get into why NVIDIA fell, but the bottom line is as we move towards the FOMC meeting on Wednesday, the market's looking for direction. The market's looking for a little bit of light at the end of the tunnel because right now there's still too many unresolved problems and too many catalysts which are telling smart money to unload or to de-risk. We're seeing gold chart at an all-time high. We're seeing it gap up even, which just tells you that there is a little bit of a panic to roll money out of stocks and into defensive plays. And so tomorrow I'm going to break down what it is we're going to be watching for. Not so much what the Fed's going to say as much as how the market reacts to what the Fed says and how that would give us a sense as to whether or not we should be loading up or whether or not we need to be tightening our stop losses because the market's going to take another big leg down. Now, no matter what, I'm going to repeat something that I've said a number of times based on that Goldman Sachs survey that talked about markets that fell into correction territory that went down over 10%, typically as low as 14%. And that's still where we could easily end up if we had another leg down. We could get that additional percentage down. But I want to remind you the reason why I've talked about it so much is that as long as the market avoided recession in the coming days, these typically have been extremely profitable environments, pointing to a potential up move of largely 29%, which comes along very rarely. And so I'm not opposed to buying right now strategically. I'm just seeing that I want to do it at the best possible moment. So anything that I'm buying long right now is purely just a little bit of nibbling. But the fact is the markets are pointing us to a lower low. Nothing is V-shaping right now. There's no momentum, there's no volume, there's no buyer interest. The market is doing the opposite. The buying interest is in defensive plays like gold that are gapping up, gapping higher. Let's talk a little bit about the VIX. The VIX has been above 20 for 11 days straight, which means that this is not a calm market, and even more importantly, it's not a market that's calming down. It's staying on high defense, right? And why is it defensive? Is because there's concern about additional sell-off, additional selling pressure. And that's one of the things I'm coming out to tell you guys again today. I warned about this in December, January, and February with all sorts of videos. And here's the day that we're in. I told you that we would be in a stock re-evaluation phase because with the conditions we have, the fact is things were overpriced. And there's a lot of things that are going to dip hard and then they're going to bounce and they won't be back at that prices that we see for a very long time. And so I do believe that we are at a point where we need to be looking at all the companies that we want to own long term and do some buying. But as far as today was concerned, when I was asked in the Stocks with Josh Discord, should I be buying today? I said, well, I would really prefer to hold off till tomorrow. Now, let me just give you one of the facts of the FOMC. The absolute majority of time, stocks have sold off all the way up to the Fed speaking. Okay, so more often than not, tomorrow morning, the futures should be down. We'll see what happens. Maybe if they were up, it might be an early indication that some people know already that the Fed is going to come out dovish. But for the most part, if you see them down, it means that we're likely going to have selling pressure until the Fed gives the market a reason to be optimistic. Let's talk briefly about a survey that Bank of America does, which reported that the month-on-month decline in investment sentiment is the survey's largest dip since the COVID-19 drop in March of 2020. Now, this has got to be the 9th or 10th time that I've compared the current market conditions to one of the big downturns that we've had, which was the COVID drop. Now, here's the interesting or the good spin that I have on this right now is that if it truly was most like the COVID drop with its fast acceleration off of the top, and then it paused briefly, got some more bad data, and screamed down lower, it means that ultimately this so far could be irrational, could be a need to reprice everything, but more than likely at some point will turn into a V-shaped recovery. That is what I believe will happen, because I believe that the factors that are driving the market down are manufactured and not so much in line with what's actually going on economically in the world of business. And I think we're still in an environment of expansion. All that happened is that everything got too expensive. Now we're seeing some market manipulation that begins in Washington that's going to cause everything to get repriced, including their $7 trillion in debt that has to get changed before the economy can really go back on a more sustained expansion run, a bigger, longer bull run. That's what's expected. Now, we are in an environment where I think we're going to still have another leg down, and then I believe that we have the opportunity for a V-shaped recovery. And I don't think that that's going to take all of 2025. I think we're going to see it here in the next couple months. And some people might say, well, Josh, are you saying that the Fed is going to come out hawkish tomorrow and crash these markets? I don't even think it matters what the Fed is going to do. Even if the Fed gave the markets a little bit of bump tomorrow, we don't have a lot of the problems that are at hand worked out. And so we're going to remain in this cautious environment for a while. The Fed isn't going to come out and issue a rate cut tomorrow. And that's about the only thing that would cause these markets to truly rip. So even if we got a rip tomorrow, I believe it would largely be a short-lived rip. We saw this last move down, which was incredible, fast-paced downturn. And the truth is, all we got from last week till today was a dead cat bounce. This was the most absolute classic view of a market that really wasn't interested in recovery and wasn't interested in buying anything on the dip. It only was a little bit of a bounce. Now, could that bounce turn into a melt up, turn into a rally? Sure, but today our melt up died. So we got a dead cat bounce, we have a failed melt up, and we're moving into a scary catalyst moment, the Fed talking. At the moment, it doesn't look pretty. Now, I'm making a ton of money on the puts. And I would just tell you that if you're not doing puts and you aren't doing inverse ETFs, because you don't have to do options, you could buy ETFs that are inverse to the big tech companies and to indexes, and you could load up on those and ride them down on bearish days. And if tomorrow's a bearish day, this is a way to recoup some of your money. So take it very seriously, because it's either that or the best bit of advice that I could give you is to sit on your cash right now. And I'm not giving any advice. This is not a suggestion of what you should buy, sell, or hold. But if you're uncertain, like everybody else, the direction of the market, and you have money to invest, I'm just going to go back to what I said before. All that we're seeing on Wall Street is a little bit of nibbling, a little bit of nibblers, not heavy conviction buying. Just keep that in mind. Okay, it's all about the guidance that we get tomorrow. So Intel up, NVIDIA down. What's going on there? Well, you know that I had called Intel's bottom not too long ago. We bought the bottom perfectly around $18.90, and we're just way up since, and we keep finding ourselves pushing up against the ceiling like we're going to break out. Now, I'm just going to give you the technical view right now. The fact is that if we get a good, solid, bullish move in the markets, Intel is going to gap up above 26, and we're going to find ourselves hitting that 28, 29, and 30 much faster than most people think. Okay, and so this is not one that we've been sleeping on. This is one that we got into before it reversed, and now the only question is, how much are we going to invest and how much money are we going to make? So what's making it move higher? Well, they've got a new CEO, which means that they're set up for for a new era of growth and change, making very good decisions. Lip Bhutan stepped in as Intel's CEO, and investors are feeling very confident about his leadership. In addition to that, they've got a new AI focus, and they're focused on cutting costs. You got to remember, Intel is a big company, lots of overhead. This was a company that received a lot of government dollars, and so it's a fat, not a lean, nimble organization, and he's coming in knowing what he has to do, which is to cut the fat and get them positioned to be a true competitor in this upcoming space, to find their niche. And the fact is, the stock is so beaten down from the top. The fact is, there was not much more justification to push it down lower. And if we got a red day, I'm simply going to add more. TAN's strategic plan includes revamping chip design, revamping up their AI innovation, and trimming their costs. Everything about that investors love. And then this is the icing on the cake. He's actually buying the stock. Big, big personal investment. Reports say that TAN's putting $25 million of his own money into Intel shares. Now, I love that. There's a great book called Skin in the Game. This talks about the fact that you really can't trust anybody that doesn't have skin in the game. This guy is absolutely saying, I'm going to make this work. I'm putting $25 million of my own money, and as far as I'm concerned, this is the bottom. So I'm super excited about Intel on a red day. This is the type of company and the type of story that I think deserves some attention. So the market's getting behind TAN's vision, and I think that if we did have a down day tomorrow with the Fed, I'm promising you guys I'm buying some INTC, and if it's an up day, then everything I own is going to get way more profitable. Let me know in the comments section if you're riding with me on INTC. Okay, why is NVIDIA down? Well, that's a bit, it's not so complicated. They're basically selling off, and there's this huge rotation out of growth stocks, out of risk stocks that are not beaten down. Believe it or not, NVIDIA, I think, is a little underpriced, but it still could be perceived as overpriced by some. And the fact is, there's profit taking from the recent move that we got off of the bottom that was leading up to this GTC conference. That's part of it. But in addition to that, the fact is there has been continued institutional rotation out of NVIDIA. So it's going to take something extreme for us to witness money flowing back into NVIDIA. You got to remember, smart money is patient. And if that wasn't the worst thing that's going on with NVIDIA, it's the opposite of what's happening with Intel. Director Robert Burgess has been dumping the absolute lion's share of his position in NVIDIA. So it's the opposite of what's happening with Intel. There's profit taking, de-risking, and dumping with NVIDIA. Now, I always come out and I share these stories, and some people think, oh no, Josh is bearish on NVIDIA. I'm not. I'm actually excited about the downturn on NVIDIA and the buying opportunity. I'm going to buy the dip. I'm going to buy the dip that dips, and the dip that dips some more. And I think in the future, we're going to see a beautiful reward. I believe I'm going to see a great reward for NVIDIA. But I absolutely need to warn you guys that if you're in option positions with short expirations, it could get very painful. All right, I want to briefly comment on the housing starts data that we got for February. There was actually a surprise surge, and that could come off as good news. Unfortunately, bad news is good news, and good news just means the Fed can't cut. And so truth is that news right before the FOMC day could be a problem for the Fed being more dovish. And so today the markets didn't like the housing starts data because it showed strength in the housing markets. All right, let's talk briefly about my A-plus trade setups that were so easy to take. Tesla puts win to the downside, no false signal. Now I've been, as I've been sharing more of my trades with other people, and that's all this is. These are my trade setups that I'm using to make money. As I'm sharing them more with other people, I've been just learning how to give more data to help guide people in which way that I'm leaning. And so recently I've been adding to each of my trade setups what the indicators are pointing to, and that's been super helpful because it kind of tells you which side of the trade is most likely to play out. Now, it's important to go in with no bias, but this tells you how things are leaning. before the market opens. And so in the case of Tesla, the MACD had a bearish crossover and the RSI was below the 45, suggesting a stronger downside momentum. And sure enough, it was puts for the win. A beautiful win, no false signals. AMD didn't signal either way. And what's interesting is that the bias that I gave on that one is that it was cautiously bearish until volume aligned with a clear directional move, which simply meant it was likely to come down a little bit, but more than likely to remain sideways. And that's what happened with that one. And then I gave some general guidance on the SPY, and that was puts win, no false signal. And the guidance I gave on that one was it was bearish leaning. Bullish confirmation would require stronger volume and momentum, and we didn't get those today. So I think if you're in the Stocks with Josh Discord, I'm continuously providing more insight and more education to the trade setups that I'm giving to help you guys make better decisions. And if you've been enjoying the profits with me, then let me know. Put a cash emoji or a bag of cash emoji with a heart in the comment section. I'd appreciate it. By the way, this is the Stocks with Josh show. If I didn't mention that, thank you for joining me today. Thank you for watching, and thank you for dropping a heart and saying hi in the comments. Hit the subscribe to get more market direction. We've got a ton of stocks that I've been doing research on in preparation of this big dip moment. And we're looking at more position taking here in the coming days. If you're wondering why I'm not alerting more buy positions, it's because I believe the market's going down. And the best thing to do right now is to take the trade, the puts to the downside. And if you're not able to trade options, the best thing to do right now is to perhaps sit on your cash. Okay, let's talk about what to expect from the FOMC meeting tomorrow. I'm going to go over that. These are the things that we know for certain. We know that the VIX is still above 20. It's not capitulated. So this is a market that's not moving from worry and anxiety and fear over to FOMO. We know that we're still in the camp of fear. So we know that as a fact. We also know that the futures have been in decline in anticipation of an FOMC meeting. So we know that tomorrow it's very likely to be red. We also know that gold is gapping up, which means that we're still in a stock risk off environment. So that's the setup for going into tomorrow. But here's what I think we can expect. That's what we know. Here's what we can expect. We can expect a big move. Looking at unusual options, we see that it's been priced in a 1.2% move on the SPY, which is huge. The market's expecting a reaction to the Fed, which means that if we wait for the market to react, it's going to be a strong trending day, whether up or down. And so tomorrow could offer a very, very profitable opportunity. But I think that based on how the market acted today, we clearly have the signal that we're going to drift down, but we're not going to really move until the Fed speaks. And so we know that tomorrow is going to be a huge day based on how the options are pricing volatility. That's all that I've got for you guys today. You know that I'm traveling. I'm not in my usual studio. I'm still in Chicagoland and I'm heading towards the East Coast, but I'm going to be in the Discord every day. Tomorrow we're live trading as a community and I'm going to be dropping those trade setups, those A-plus trade setups. I'm looking forward to making some money with you guys. I'll see you in the morning. Right before the market opens, I'm going to be going live a little bit earlier than usual so we can talk about the setups a little bit more in depth before we end up taking them. We want to be able to act on that initial move. But even though we're going to live trade in the morning, right, we might be able to pick up a little scalp. I think the big profits for the day are going to be had after the market reacts to the Fed. Appreciate you guys. Peace and blessings. We'll see you in the next video.